should be a good opening to trade, which should take us to the brink of 5,400. So it's been a long journey from 4,500 to 5,400. Is it good for more? Sandeep Shah of Sampriti Capital joins in to talk about that. Sandeep, good morning. It's been a terrific few weeks for the market. Do you think we've slipped into a bull market, or would you take profits here?
Then, the last time I was on this early morning show, I had again repeated my market call of 44 to 4,600, and that would be a level to buy. And we went to 45.30, and we've bounced back very nicely. Of course, the market corrected about 28% from the peak, which is very close to the 30% correction that I was looking for. It was interesting that at that point of time, when we hit 4,500, I couldn't find any bulls on the street. And I think now that the markets have rallied, I think most of the bears seem to have disappeared, but I still think that there are still quite a few skeptics left. So if you were to broadly look at what's really happening, I mean, in the US, we've seen that money supply has actually been going up. What we're really having globally is a relief rally, which is liquidity driven. Now in the US, there's relief that the economic data is much better than what was expected. US money supply is going up. If you look at Europe, there's relief that the pumping of liquidity by the ECB, where the balance sheet has gone up by 40% in the last 6 months to 2.8 trillion, is actually abating the insolvency issue. And if you look at closer home in India, I think there is a bit of relief that the quarterly results haven't been as bad as was expected. I think the results are still not good by any stretch of imagination, but I think expectations had become so low that that the results have been marginally better. Though there are some bankers who feel that there might have been some that the numbers may not have accurately that we have seen may not accurately represent the truth. So this is a market which is driven on animal spirits, which is liquidity. So, these kind of markets can actually go higher than perhaps what you might think is a sensible place or a rational level for the market to be in, given the state of fundamentals. Of course, we've seen that, PMI numbers across the world seem to be fairly good. In fact, whether it's India or elsewhere, in the US, in the Eurozone as well. In fact, in the Eurozone, if you look at the composite PMI, which is manufacturing and services, it's actually above 50, which shows expansion. Of course, manufacturing is still contracting. But if you were to look at, take a closer look at some of the US numbers, for example, the last quarter GDP numbers which came, out of the 2.8% GDP growth, almost 2% was perhaps because of restocking. So I think the question that we've got to keep ourselves and ask ourselves is whether this is, whether the consumer demand will sustain, because if consumer demand sustains, then the restocking will, in spite of the restocking, you will still see growth. But if consumer growth actually falters, then you might see that it was just a bit of a blip, and you might see data go back again. So that's I think one caveat that I would like to highlight. The second thing, of course, is that in India, of course, also there are expectations now, given where markets are, that the government will act. If not on policy, then at least ensure that projects are clear, decisions are taken. But some of the events that have happened last week might actually make decisions become a little more, may make the bureaucracy even slower than they have been. And I'm just highlighting that as a risk. In terms of the upside, I think somewhere above 5,400, I think it might make sense to raise a bit of cash. But
what do you think the market could be bidding for in the near term? If you see more upside potential beyond 5,400, what do you think we could get to, and what kind of flow do you think the market has in place now?
So, from a safety perspective, it might always make sense to, raise above 5,400 levels. That's simply from a risk management perspective, given that it's all flow driven ETF money, and ETF money can turn on a dime. If you were to look at the downside, I think that I think this is something that I mentioned even the last time I was on this morning show, was that I think if you have to draw a curve of the policy paralysis or the policy inaction, we probably have hit bottom. Now, the thing is that if, and this is a big if here, I think, let's put it this way, that my base case assumption is that the market does act, but a little slower than what the market expects. That the government does better than what they've done in the last, say, year or two, but still falls short of expectations. And that seems like a reasonable assumption, that there is some movement, but it's perhaps not enough. And in that sense, there is a risk that the government might be disappointed by the budget, no matter what happens to the UP elections. But I think the risk is, of course, also that the government might disappoint, given that there isn't that much room to maneuver for the government. So unless and until, of course, you find a change, a political realignment of forces, and you find that it's not Mamata Banerjee who's supporting the UPA, but so maybe the Samajwadi Party. So there are a lot of ifs and buts here. But I think the floor in terms of given the underlying premise that there is some movement, but it's not enough for the markets to be happy, I think the floor might perhaps be closer to a sell-off below 5,000 is still conceivable in that environment, but we might not get back to that 4,600 levels, perhaps go back to say maybe a 46 to 4,800 levels. But I think